could take a chair. We're about to begin. Well, welcome to EFMA's Bank Plus Fintech Conference. I'm Pete Apr-18, Senior Advisor to EFMA, and I'll be your host for the next couple of days. This is EFMA's first ever event in the U.S. and its first Bank Plus Fintech Conference. So all of you are really part of history. Vincent Bastide, who is the CEO of EFMA, has a deep interest in our topic. He's combined positions at technology companies like Texas Instruments and Apple and Microsoft with executive stops at BNP Paribas and now, of course, at EFMA. And EFMA's current chair, Yolande Piazza, who we'll be hearing from a little bit later on this morning, is the CEO of City Fintech, combining our subject matter under one roof. The EFMA team has worked extremely hard to assemble a world-class array of speakers for us. And over the next day and a half, you'll have the opportunity to interact with all of them and with your fellow delegates. EFMA's mission is to act as a facilitator of information for the global financial services industry. And the nearly equal mix of international and U.S. representatives and registrations at this event really reflects that. Since its inception in 1971, EFMA has been a nonprofit membership organization. So almost all of its financial resources are dedicated to developing research, publications, and events that advance that mission. And this conference is really an excellent example of that dedication. We'll be exploring the evolving relationships between financial services providers and the broad array of technology companies that develop and deliver solutions for financial, consumer, and business clients. You'll hear from startup, early stage, and well-established fintech companies describing their journeys from germination through funding rounds to marketplace success. You'll also hear from banks and other financial services providers that have searched for the right technology partners to keep them better connected with their markets, more relevant to their clients, and consistently profitable for their shareholders, and how they've successfully implemented fintech solutions to achieve all those goals.
When we look at fintech and banking, one of the coined terms that my friend Ron Shevlin used years ago and now has become used by almost everybody is platformification. Basically, the building of a platform to provide multiple banking and non-banking services to the consumer to make their life and jobs easier. When we look at overall banking, we now know that the fintech evolution and the banking evolution is happening faster than ever before. The combination of more data, greater insights, higher demands from the consumer, and new technology revelations and innovations has made it so that everything's working faster than ever has before. We used to be in an environment as bankers that we drove what the consumer would see and have. Now, it's different. It's being driven by the consumer. The banks are behind the consumer from the standpoint of what we're delivering and what their expectations are, and the government's behind the banks, trying to play catch up. This is our advantage. Data is our advantage going forward because we have more than any other type of organization or any other industry. However, the non-banks, the big techs, are catching up. The fintechs are using the small amount of data that they have access to deliver better customer experiences than most banks are doing. The key is going to be to bring the power together between data, analytics, digital, and experience to deliver a better product for the consumer. We're trying to do it for a changing consumer. The digital consumer is no longer what they were in the past. They're not just the millennials. There's a broad demographic spectrum. The demands are higher and the demographics are broader. I myself am definitely a digital consumer. My wife, who's 2 years younger than me, is not a digital consumer. You're trying to impress a person right now who has an Alexa device on his desk, a robot on his desk as of 2 days ago, a Google Home, and an Apple iPod. Basically, multiple voice devices to see who can deliver the best experience. It keeps on getting better. It keeps on learning. We're demanding, the consumer's demanding, simpler and seamless experiences. They get frustrated if a site loads in less than a second. They get frustrated if they have to tap 4 times when they know that if Amazon built it, they'd have to tap once. What we're trying to do as bankers, as we combine with fintech organizations, is find a way to simplify the delivery of the most basic of financial services. Brett King and I have had numerous conversations about, years ago we talked about Africa and M-Pesa, and the fact that, boy, it was kind of it seemed like it was a good rudimentary solution. Now if you look at it, isn't that the solution we're all looking for? That one-touch payment, that one-touch transfer of funds between one person and another, where no bank's really involved, or where the bank's in the background. You find that simplicity, the immense amount of simplicity with M-Pesa, really is a standard that we should all be moving towards. We're using technologies that remove the friction, the use of voice, the removal of steps, the using of the technology that's within our phones to simplify a process. My son sends me a text, says I need some money. He's at university. I simply go to the Venmo app, touch his name, make a payment. I'm sorry, but even the establishment of that account was simpler than any bank offering that's out there today, Zelle or otherwise. How are you going to replace Venmo when they've gotten down to the very basics already? How do you replace PayPal? How do you replace the technology that is making it so everything I'm doing with regards to banking is simpler? I have a 14-year-old next door neighbor who cuts my lawn, and he said, some of you have heard this story before, but just 2 years ago, I asked people in the audience, how many of you have ridden in an Uber? And there'd be a few. I don't even ask the question anymore because it'd be easier to say, hey, who hasn't taken an Uber? When you think about it, what Uber has done is taking the ultimate poor customer experience, a taxi ride, and made it better. And then they made it seamless by making it so that I could pay without ever having to make a payment. I could just walk out of the cab. Then they made it where you could rate them based on how well they did. How many banks here today would be willing to have their mobile app rated on a time-by-time basis and would listen to it? Then they started integrating things. Uber Eats. So now when I go someplace, it gives me recommendations as to where to go to eat based on my open table profile. In addition, when I do a concert ticket with Ticketmaster, it says, do you want an Uber to take you to and from? That integration is what we're trying to achieve with banking. Without the Uber integration, without banking in the background, we're not serving the customer fully. We're simply looking out for ourselves. When we first built our digital platforms, I use platforms very loosely, when we first built our mobile engagement, we did it, we said for the consumer, but bottom line is everybody had to make the business case that said, this will save us money. This will make it easier for us. Well, we found that the transactions were not a one-to-one. There were a lot more transactions, just like we should have remembered from ATMs. But we most importantly learned that really we were building this for us, not for the consumer, and it shows. And the physical will simply support the delivery network of digital. You'll still have branches, sorry, Brett. But you'll have quite a few fewer of them. We're over-branched. And there are strategies as to why you would build more branches, but most organizations that are building branches today should be rethinking their strategy, shrinking the physical delivery network, spreading it out further, not every mile, but still having the billboard, the branch billboard. You look at Apple, you look at their offices, this is a good example. You look at it and you say, why all the windows? Well, because they got something to show. They have people of all ages interacting with their devices. Why do we have windows? For security purposes, so if we were being robbed, people would be able to see it. That was the original reason why banks had windows. The reality is our branches are empty. Well, probably the kind of services we sell are not physical. We won't bring them back in. Let's shrink those branches. Let's support the digital network. Let's make it so people can see other people open accounts, whatever they want to do. But let's not make it the backbone of the whole organization. Can we make it where people actually are up late at night, goofing around with their bank account, doing gamification, increasing their savings, changing their financial portfolio because it's actually fun? That's where PFM succeeds. PFM does not succeed by giving me budgeting tools. I may say I want a budget. I don't know many people in this room, besides the accountants, that want to budget. What we want is we want to engage. We want to be able to deliver, as we look forward today, and we're going to be having a lot of great people speaking. We're going to be talking about how do we provide customer centricity? How do we become much more data driven? I cannot emphasize enough that our retail banking report on trends and predictions, number 1 through number 10, every one of the trends and predictions were based and foundation on data and analytics. When we just did a survey to find out where is machine learning and analytics in the marketplace today, number 1 is mostly with the big banks. Number 2, when it's with anyone else, it's pretty much for fraud and identity theft. Basically, for the same things we've always used machine learning and AI for in the past. We need to start using it for customer experience, for delivering a better delivery service, a better experience to the customer. We need to apply our analytics. We have to not only create great reports, we have to deliver fantastic experiences. Right now, we have all the information needed. Wells Fargo knows every one of my no card present transactions. It knows my monthly transactions. So when I have fraud on my debit card, it really could give me the list of those organizations I pay on a regular basis that I probably should connect with. They are not able to do that right now, or they don't do it right now. However, in a great way of banking, and I know we have somebody from Wells Fargo here, and I give them credit because they're doing a lot of things really good, and I'm still with them. But in that same transaction, the person says, by the way, we have already turned on your Apple Pay, so you can use your card. That's pretty cool. My business bank said I had to come in and get an automatic issue. Then I got there and they said, oh, you're a small business. We don't do auto issues in the branch. And we won't deliver them by FedEx, so you'll get it in 3 to 7 days. But when you look at that, and I'm a banker by trade, when you look at the Wells Fargo example, you realize there's a separation between the old school and the old new school. The old school has 5 people involved in different parts of the checking account, each of which would love to be the boss. On the other hand, Apple Pay says, what do we have to do? Let's get it done. Contextual engagement, design matters. I talked about that already. You need to build a good design product. It has to be simple. You have to realize we're going to be an expanding ecosystem. I believe that the bank of the future is not going to be delivering just banking services. Banking will be invisible behind everything else. And that's a big winner. Finally, you want to partner with leaders and you want to rethink your distribution network.
Because technology is becoming so available, is becoming more affordable by all different types of companies, including banks, that technology has the potential, if it isn't already, to become a commodity. Technology, to me, and I think this is one of the things you have to understand, is an enabler. I think that the key is, if you believe technology is going to become a commodity as well, the question is, as technology is an enabler, how do we use it? How do we use the technology to actually enhance customer experience? Most people that I've come in contact with, and I've traveled throughout the US and Europe talking to financial institutions, ask them about their views on technology. And what they focus on most of the time is speed, efficiencies, ways that the technology can help them get to the end zone much faster. And that's great. But isn't that a given? Isn't that what technology does no matter what? It makes things go faster. It is more efficient. Decisions can get made quicker. But the real challenge, I think, and I think that's going to separate the winners from the also-rans are going to be the institutions, the companies that can determine how to use the technology to enhance the customer experience so that your customers actually enjoy it. Think about it, actually enjoy technology? That's interesting. When they do their banking. I think the third thing you have to understand and accept that this is not about getting better. Pollard wrote, "The arrogance of success is to think that what you did yesterday will be sufficient for tomorrow." Again, very consistent with we can't stay the same. So what does that mean for our companies? You stop thinking about this. I know a lot of bankers in here, fintech companies, whatever. And there are a lot of good banks, and there are a lot of great fintech companies. But the question is, how do you stand out? How are we going to survive with this existence, this wave of change that's happening as fast as possible? And with the understanding that what we did yesterday probably will not be sufficient for what we want to do tomorrow. So I think for us to survive as a financial institution, I think we've got to ask some pretty basic questions. How do I get people to continue to do business with me? Big question. Sounds very easy. That's a very difficult question. In light of new technologies, in light of customer preferences, in light of speed, how do I get these people to come to my webpage, my online banking system, to my bank branch, drive by 10 or 15 others to get to me? In light of the fact that our products are a commodity, that technology is becoming a commodity. Difficult questions that we're going to have a lot of smart people answer. How do I differentiate my company? How do you differentiate it when you think about all these different aspects of it? It can't be just because we're big. It can't be because we say we give good service. Everybody says they give good service. That expression is dead. Everybody gives good service. Every bad company gives good service because they tell you they do. So people don't expect that. They don't rely on that whatsoever. So the question you've got to ask yourself is, how do I stand out? I don't care if I'm big, small, medium, large, fintech bank, it makes no difference. How are you going to stand out? You've got to find your secret sauce. And to do that, quite frankly, I think it requires a very strong value proposition and one that creates a clear choice for customers, a clear choice. The choice can be, I don't like it, I don't want to do that, do my banking or my technology stuff that way, that's fine. But you're going to have to provide a clear choice to people. What we did is we created a whole new bank, turned our branches into bank stores, created a service culture. In fact, most people will say, well, in those days, you got to have sales culture. And I can remember the 90s. And one thing I said, do not talk to me about sales cultures. I'm not interested. What I want is the service experience culture, because I figure I'm going to get all the sales I want if I treat people right. If I treat people right, I think I can. We've all had the hard sell piece, and that doesn't work. So don't talk to me about sales culture. I want that customer experience piece that is so big. The other piece that was important to all of us in banking is that in this period of time, the 90s, actually this is still true today, that we're most effective in selling our products and services when we're sitting across the desk from somebody, or a new client or new customer. That's when we're most effective, where we can get the 2, 3, 4 product presented to them. Harder when you're online, because you don't have to try on these products. You don't have to feel the fabric. You can get the product, the thing you want, and if something pops back up and says, well, how about this or this, you can go, forget it, boom, and you're gone. So we've always been more effective when we're sitting face to face with people. That's what we did with these stores, to make this experience pleasant. I was told by some people I was a nut, I was a crazy person for trying to do this. And one of the things in banking, we do every single day is we manage risk. That's what we do for a living. And we started to think about the risk in doing this. If this failed, when I started with the new store design, I was going to have a pretty cool looking branch, and it would operate like everybody else did. So the risk was minimal to zero. What happened, in doing so, by the way, we also created these stores became community centers where we have, and I'm not exaggerating when I tell you, during the middle of the day, you can walk into one of our stores, there might be a yoga class going on, there could be a Wii bowling league happening, a book club meeting, all throughout the day into the evenings. We make these facilities available. Why do we do that? We want people to know where we are. We want people to come in. We think when they're there and if they enjoy the experience, they might bank with us.
Meet BFF by Umpqua Bank. It's your best financial friend, just a simple tap away. mortgage loan master. Or Gareth, who has a gift for big picture financial planning. From helping to manage a lost or stolen car, to stopping payment on a check, or coaching you through saving for your first home. Your BFF has the expertise to take care of all your banking needs. You'll keep the same BFF over time, so no need to ever repeat yourself. And rest assured, your information is secure from end to end, so you never have to worry about what you say or who will see it. Have a random banking question at 1 a.m.? Text a friend. Your BFF will get back to you the very next morning. No outsourced helplines or hold music. BFF by Umpqua Bank. Because everyone deserves someone they can talk to about money.
What we wanted to create was obviously a digital banking platform that we felt is very, very unique, and to add the human piece to it. You're able to talk to your best financial friend. That's what Umpqua Bank calls it, best financial friend. We have collaborating banks that collaborated with us, and I'll get into that in a second, that call it something different. But it's called the Engage system, is the name of the system that Pivotus has created. And you can text, Skype, phone call, every different form of communication with your best financial friend if you care to do their business. In other words, and that means basically you don't have to go to the store ever to do anything. We created Pivotus, as I said, in the very first part of 2016. The company really went up after we started. It's in Silicon Valley. It's in Palo Alto, where we felt we needed to position it for talent. That did very well. It got off the ground, I'd say 6 or 7 months after that, and about 6 or 7 months after that, we were in pilot with this particular program in we're in a pilot in Australia, in the Netherlands, and in the US. And it has been a huge success. We're looking to start rolling this thing out throughout our company in the May-June period time frame, as well as to potentially other banks as well. One aspect of this that is important, by the way, I've been one of those guys that's been on the pilot using it, and it's amazing as far as I'm concerned, how many times I do use it and get to know my BFF. You get to pick your BFF. You scroll through and you pick who you like. And I know when I picked mine, and I told Mark, I said, hey Mark, this is Ray. I got good news and bad news for you. Bad news maybe is I'm picking you as my BFF. You know, I can see his hair sort of go up a little bit. And how can bankers be so arrogant? Think about this. To be so arrogant that we have all these branches, therefore this doesn't apply to us. In light of technology that's happening in our industry, are you kidding me? This industry is also under siege, and unfortunately, as I've talked to some of you in the audience already, some of our CEOs don't get it. But if they don't make these changes, they also will find themselves irrelevant.
Philosophy they call touch, not type. It's about as simple as it sounds. If you can give the customer something to touch rather than make them type it all out, do it. And so you'll see a little bit of a touch, not type experience in the demo that I'm about to show. I was going to do a live demo for you, but unfortunately we couldn't get my phone to project, so I've got a little video. And Jezebel, just an example that they looked in their wallet and they couldn't find their debit card. Maybe they've been traveling and they're worried about maybe they lost it, maybe they didn't. They want to turn it off. So they're going to look Wells Fargo up and they're going to see us there. They're going to tap it. Now they're in the message conversation. I can't find my debit card. What happened? Banker says no problem. They introduce themselves. This is Josh. And he says he's going to help them, but he needs them to authenticate first. So this is when Josh is going to send the customer that iMessage extension, the authentication bubble. The customer is going to touch it, and up they are. They are going to use their Face ID. They are now authenticated. It is going to slide back down, and Josh can see that the customer is authenticated, but no information has been passed through Apple Business Chat. Can you pause here? So what you're seeing here is part of the touch, not type experience. It's called a list picker. So Josh probably has a few accounts with Wells Fargo. Our banker needs to figure out which one did he lose his debit card for. Rather than asking the customer to type out that whole account number, I mean, who even remembers their account numbers anymore? The banker can now just put this list picker in front of the customer. They can tap the one that they're talking about, done. You can continue to press play. So now the banker knows which account they lost the debit card for. They can put a temporary hold on that account, and the customer service interaction's done. If Josh finds his debit card later in a coat pocket, he can go and message the same banker again and get it turned back on. Or in this case, the banker's provided a link to our app the customer can go back to the conversation, they still have it on their phone, touch that link and take them straight into a deep link into the app, and they can do it themselves. Assistance. So right now, Wells Fargo's experience in Apple Business Chat is with a live banker only, but we will be introducing automated assistance into this and other messaging experiences. This is another example where Apple has started with the customer experience first and then worked backwards with the technology. They have a very clear vision for how automated assistance should work within the messaging experience. They're not looking for companies that create bot-only channels. They want the human to just be one step away. They do not want to see customers come in and repeatedly ask a bot the question and the bot not quite get it, not quite get it, not quite get it, not quite, okay, forget it, this is a bad experience. If the bot doesn't get the question, they want the human to be able to step right in. This absolutely jives with our philosophy around how automated assistance and human assistance should work. If a customer has something that's simple and easy, and a automated assistance can do a great job, it's fast, take care of it in a second, move on. But as we all know, with banking, a lot of things that people want are complex or are filled with emotion, and those are the times that the human is there. We do not want to make it hard for them to get to the human. But other times, you're not in your app. You have the question when you're reaching for that debit card you've lost in the coffee shop. And that's where experiences like Apple Business Chat are going to be important. There will be other places and platforms that messaging will also be important that we will continue to look at. From our perspective, it doesn't matter if the customer comes in from the app or through Apple Business Chat or some other messaging location. We want to manage those messaging channels holistically and to deliver a consistent and rich experience through all of them together.
Where do we want to meet customers and where they spend their time? So we have the opportunity and the luxury to be unencumbered by day-to-day deliverable and really take a step back and engage with our customers on a very, very different basis. We do what we call co-creation. We spend a ton of time with over 25,000 customers to understand what their pain points are, what their wants are, and what their needs are. But we all know that everyone can describe something they want, and when reality comes, are they actually going to use it? So we actually work through the designs and the concepts with our customers. We video them in their homes using and testing out some of these services. And we've also extended to building platforms where customers can come test with us along the way. So they really get to come in, use their own data to be able to validate those experiences to see if it really met some of those pain points. So we are on a journey about education, simplification, personalization, and humanization. Our goal is to be the always-on life partner for our customers and meet them wherever they need us to. So if we look at the challenge, customers need help managing their money. Education is key. If you think about it, 76% believe they should be doing more for their financial well-being. But we've also seen a shift. 73% of millennials are actually excited about an opportunity from non-traditional players, like a Google or an Amazon or a PayPal, as an example. But regardless, what we've identified and what we spent a ton of time proving out, that demand for better tools to really understand overall performance, financial wellness, financial performance, the needs for that are absolutely tremendous and absolutely key for the journey that we're on. So, people need to understand, what do they do with their money? They need to understand, how do they compare? Are they on a safe journey or are they on a really risky journey? And what are some of the decisions that you can make? If you go out there and Google personal financial management or wealth, there's a ton of information, but there's no easy way to navigate it, and there's no easy way to personalize that to really help on my own personal journey. So what does financial wellness mean to Citi? This is where we've had a phenomenal opportunity to really step back and start to redefine the parameters of traditional banking and not start from a set of products that everybody expects the banks to deliver. So what we've done is really take a look at what are those key pain points and what are the things that we needed to go and address with our customers. And one of those things that rated really, really high in all our conversations is, can you just show me all my bills in one place? If I just had a better understanding of all my outgoings, if you think I've got direct debits, I've got automatic withdrawals going out, I have all of these different outgoings that need to happen, can you just bring it all together for us? So what we sat there and said, well, that's great, but then I need to open this up, right? I need to make sure that I can get both your on-us information and your off-us information. So we've opened it up to allow people to bring in all of that data so we can start to help them again on this journey. What we also said is, if we're really on this mission to educate, and I'm a big believer that we have a social obligation to be able to do this as we start to understand and the technology and the tools enable us to be able to move forward, why not open it up to everybody? So you don't have to be a customer of Citi to come in. You can come in and start leveraging the tools, leveraging the educational message, leveraging the ability to start changing your savings and your overall behaviors. Leverage the opportunity to start getting into demographic compares and understand how you perform against everybody else to really help you on that financial journey. And if somebody doesn't become a customer of Citi, but they walk away feeling better educated and better informed, that's the right thing to be doing. So where are we headed? One of the things that we've been able to do is really be able to have the luxury of stepping back. We've built out platforms to make sure that we can engage differently. So 2 years ago, we launched our open banking platform so we can engage with partners differently and really think much more about a Fintegration approach than believing we have to develop it all ourselves. We've also launched at the end of last year a platform called Canvas. So where people can come in and actually test out our different theories and our hypothesis and different potential opportunities. We partner with our Citi Ventures organization to run what we call a D10X. So for those of you that are familiar with Shark Tank, we have our own internal Shark Tank program. And we can build out these solutions and give them to the customers so they can actually test them real time and then come play with us, which I think is a fascinating and a great way to be able to deploy things quickly, cheaply, get instant feedback, and not have to have them fully integrated in your overall product offering until we know that it's really resonating.
2007, and most recently, as Jim mentioned, our Fintech report in 2017, and we've got a great initiative which we're going to do a soft launch or introduction to later on, which Vincent will talk about, but I'll dive into what we're doing first. So as I mentioned, we try to do a little bit different approach to our thought leadership. So this year, we have a couple of components to the thought leadership. So we have a report. I think most of you probably have one because I think they're all gone now on the front. So it's a large, thick report. I'm not going to cover everything in there today, but I'll cover some of the key highlights and the insights. But last year in our FinTech report, we talked about kind of the three phases. We had a phase where FinTechs were irrelevant, they're not going to impact our business, to FinTechs are taking over the world and banks are going to die. And then we quickly moved into okay, that's not really going to happen. There's actually some kind of moderation where there's value that FinTechs provide to the industry, and there's a core value proposition that banks provide as well. So some form of collaboration, leveraging the strengths of incumbents and FinTechs, and we took a very banker view of last year's report. This year we took more of a FinTech view, trying to understand what are their perspectives on their role in the industry, what impact are they playing, and honestly, what are the challenges that they're having, both in terms of running their own business, but in terms of working with banks and the challenges that they have in working with culturally different organizations that may be a little bit slower, different barriers that are challenging. So I'll go into some of those key findings that we found from those FinTechs today. And then the last one is certainly a further collaboration around the building of this ecosystem that's taking place and how you're creating those services and the role that big tech is playing. And we've seen a number of areas around GAFA that's starting to crumble in. And I think there's an opportunity where one of the challenges with fintechs is they're small, they don't have scale, their access to customers is challenging, their trust. So there's a number of factors that make it hard for fintechs to compete on their own. But if you look at the big tech actually has great engagement with their customers, they have regular contacts, they have the trust, they have the ability to leverage data. So I think we are starting to see some opportunities where the big techs are going to start having a bigger impact on the industry. We understand there's a fintech thing out there. I think we're seeing a lot of the large banks really starting to, I think we've seen some great examples even this morning of how, banks aren't, you don't want to count banks out yet. I think there's a lot of great stuff happening in the banks, but I think there are some challenges as well that still need to be addressed. And there are some roles that fintechs are playing to enable those relationships. So throughout my presentation, I've scattered a couple quotes up here. I'm not going to read any of the quotes, but you'll see the QR codes here, which would take you directly to the Agents of Change video that those people are speaking at. So we'll distribute this presentation after, and it'll be able to give you the links to those presentations. But I think when we think about how the customer journey is evolving and how it's advancing, I think there's some high-level categories that are happening. So we're seeing extra levels of personalization, we're seeing increased speed of service, we're seeing more proactive insights that are directly tied to what clients' needs are, a bit more intuitive interactions, and more importantly, improved convenience. We're able to get more banking services into the day-to-day lives of customers, and that's having an impact on the industry. What we also did was we spoke with bankers and fintechs to understand there's a lot of technology going out there, and you're not going to be able to invest everything everywhere. So we wanted to understand what are some of the technologies, what are those emerging areas that you think are going to have the biggest impact, what are going to have the biggest play in terms of when you're trying to meet your customer expectations. And we broke those into 4 categories. The first one is around data related and insight related, so everything around analytics, AI, biometrics, how you're leveraging data to be able to deliver better experiences and more customized experience to your clients. The second one is more of your user experience, so kind of your front-end experience in terms of delivering. In many cases, that's more of a Band-Aid, or as we used to say, the lipstick on the pig, but I think there are some interesting areas on the front end that still are actually advancing. The third one is more of a cost reduction, so stuff around RPA and chatbots and automation in general, which are really enabling more efficient cost and delivery of services. And then the fourth category is more of your platformification, so you're building the ecosystem, the leveraging of open APIs. A lot more is happening right now in Europe, which is more regulatory driven, but I think you are seeing some market driven activity happen in markets like Asia as well as here in the US. Fintech's found. Because I think also one of the big challenges is you've got large banks which have large teams and big scale. Many times the fintechs have small teams. The fintech may be the marketing person, the finance guy, and the developer. And so there's limited time and value that the fintechs have as they're building and as they're working. So there's a critical element of the fintechs to really strategically prioritize who they're working with and where the real opportunities are, and then also having the respect when you're working with the banks that they understand that the time that they're working with you isn't just a lab to learn from. Because I think we did hear a lot from fintechs that they felt that they'd almost do a lot of tours and learning with the banks where they learn from what they were doing and then they go and take that away and try to implement themselves. So I think having that mutual respect is critical when you're looking to partner with each other.
Human. And unlike my other books, and I'm signing this over the coffee break, it's not just about fintech and banking, it's about humans and life. And it's one of those things that happened to me through traveling since Digital Bank became quite successful 4 years ago, is that I've traveled most countries of the world and discovered and realized that a lot of people talk about the 4th industrial revolution, whereas I think, and quite clearly from what I've seen, we're in the 4th human revolution. The first revolution was actually becoming human, Homo sapiens. The second was becoming civilized, although that's still questionable. And the third was becoming commercial and global and industrial, which was the Industrial Revolution. And in each of those revolutions, we invented something new about trade and how we transact with each other. So in the first revolution, we created beliefs that we could share and create common beliefs with each other around how the world operates. And the second revolution, we created money. And the third revolution, we created banks for the Industrial Revolution. In fact, the Industrial Revolution is quite interesting because it's all based around steam power, steamships, and steam trains, and the ability to go across borders, across countries, across continents, and trade and transact. And that was the reason why we invented banks, because when you have global structures for trade, it's quite difficult to trade if you have to carry gold and silver around in your pocket. It's rather heavy. So paper money and paper checks became the fuel of the Industrial Revolution. And to have paper money and paper checks that could be trusted across borders, we had to have some form of agreement and structure across borders that everyone could trust. And so we invented banks. And banking goes back 500 years. Most banks in most countries goes back to the origins of that country. JP Morgan Chase started in the 18th century. It's a 200-year-old institution. In fact, if you go across most countries and look at the oldest companies, they're the banks. Because the banks were invented as stores of value that could be trusted to issue paper notes and paper checks because they were licensed by governments and therefore were regulated and could be agreed as a method of doing cross-border trade. The check in particular was the innovation of the Industrial Revolution. You think about before the check, the paper check, how would you trade? With very heavy lifting. Now it's very light lifting because I can put a check in the post. And quite often I could say, oh, I put the check in the post, haven't you got it yet? But quite often the check's in the post. And it's a good way of transacting, but not today, because today it's very slow and very expensive. You know, I received a check from an American client recently, because only American clients issue checks anymore. And it took 28 days to process and cost me $200 because it was for more than $10,000 in value. That's not the way in which today's network works. Today's network should work as something that's fast and almost free. And that's what's starting to happen with fintech and with the revolution with technology, taking everything that was there before in the industrial era and creating a digital version of the industrial era product. And when we look at what's happening today, and the speed of change is quite phenomenal, and how we keep up with that speed of change is the biggest challenge for all of us, particularly if we are a large industrial era institution, because everything about the business model of our industrial era institution is being attacked by software and code. You can see that by the very fact that the largest companies in the world today are digital companies, and they're valued as the most valuable companies in the world because they are digital companies. They have replaced the industrial era companies. And one of the biggest facts in that replacement is that they are very light companies. You know, we talk about Uber and Grab and Lyft and Airbnb and many of these new companies as the digital era companies. What we don't recognize is that what they're doing is creating value at 100th of the human involvement of the previous revolution. In the Industrial Revolution, everything was manufactured, distributed, and serviced by the company, and so they had thousands of people to do that. Today, most of these institutions that we deal with, like Google, Facebook, Amazon, have no one involved. They just provide the service on the internet, and the content is created by the players on their service. That's what we talk about as platforms. Buyers and sellers are on platforms, distributing and providing all the content. So why Facebook provides their content, their users do, and then they steal it and sell it, as Mark Zuckerberg is testifying this week. But it's all about the content is not created by the company. The platform is provided by the company to enable people to connect online. And it's connecting people who want something with people who have what they need, that these business models are based around. That's the platform revolution of today. We've seen it happen in so many other industries, and yet in banking we haven't, but we are now seeing it in banking and finance. Because suddenly we're seeing companies that are very light in terms of people, but very deep in terms of connectivity. And that's what the PayPals, the Stripes, are doing and providing. It's the reason why these companies are creating a new way of thinking about money. And it's not about the physical distribution of money through branches with humans. It's all about the digital distribution of data as currency through software and servers. That is the difference. And it's a fundamental difference. And it's 1,000 or 100,000 companies doing one thing brilliantly well, rather than one bank trying to do everything average, which is the way it's been historically. I started writing about this 10 years ago as banking as a service, with the idea that I could grab a whole lot of software APIs, and using plug-and-play software I could build my own bank. Now that was a vision I had over a decade ago, which has now come to fruition. However, I don't want as an individual to deal with 1,000 companies with their plug-and-play API software. I want someone to curate that and deliver that to me, who I trust, which is still my bank, because they have a license from the government that's regulated as a store of value to manage the transfer and exchange of value schemes. This, therefore, says that the bank has to fundamentally transform their business model from the industrial era to the digital era. What is the digital era business model of a bank, and how fundamentally different is it? I believe it's a revolution of the banking structure. And it's all about curating these thousands of companies that provide one thing brilliantly well, rather than trying to do 1,000 things averagely. When you think about the bank and the business model of a bank, it's basically a back office manufacturer of products that does all the admin and service, a middle office transactor and infrastructure that connects the back office to the front office, and the front office that's really all about delivering a great customer relationship. That's been true for decades. But in a physical structure, we dealt with that as something that was all organized around our products. Most financial institutions are product-focused rather than customer-focused. I know this from dealing with banks for many decades, as Pete just outlined as we started. And one of the challenges of most banks is that they have silo product-focused systems and structures. And we started to try and change that in the 1990s. There were two books in the 1990s that influenced me immensely. One was The Discipline of Market Leaders, that talked about this business model of retailing, processing, and manufacturing, and said that any company, not necessarily in finance, but any company does one of these things well, maybe two of these things pretty good, but they'll never do all of them well. So a manufacturer, processor, retailer of finance, you might have someone who's really good at retailing finance, but they're average with their products, they just copy everyone else's. There might be the innovator who innovates and creates new products, but they're not that great at processing. When you think of Apple, do you think Apple is good at manufacturing, processing, and retailing? I'd say they're pretty good, but there's a shake of the head there. I don't think they're that good at manufacturing, if I'm honest, based on my latest iOS updates. The other book that influenced me immensely in the 1990s was Re-Engineering Incorporation. And I was consulting around this a lot and was talking to companies around how they need to transform their financial structures to be customer-focused rather than product-focused. And in the 1990s, we had a lot of product-focused systems based around credit and mortgage and loans and deposit accounts and cards that linked through processing to the front office customer relationship, which is all about the humans and trying to make happy relationships. And the view that I had is that to re-engineer the bank corporation, you have to start with that front office and those moments of truth and those customer relationships, and then build the bank back. But it never happened. Instead, we talked a lot about share of wallet and pushing products through channels and trying to get more customer profit through cross-selling. This is where everything is changing today, because the product is still a focus, but it's not the focus. The platform is the focus, and the experience. How to provide a great customer experience through their digital connectivity with the institution. And that experience is coming from things, my fridge, my car, my television, my house, not necessarily from me. How do you get a relationship with things? That's a challenge right now. And that's what the fintech revolution is all about, is creating that connectivity through platforms to things and working out how those things can be more intelligent with money, and then connecting it back into the financial institutions. And that's where we have this new world. When you think about this new world, you know, if I want to get a ride, then all Uber's doing and Lyft is doing is connecting me with someone who's got a car. And hopefully they're not a psychopath. You know, if I need to sleep somewhere, then all Airbnb is doing is saying, I'm asking for a bed, and connecting me with someone who has a bed. That is the new platform world. And yet these companies have their valuations based on that connectivity on a platform of humans through the digital network. The first time I heard a fintech talking about this idea was on March the 30th, 2005, 13 years ago. And there was a presentation at the Financial Services Club that I ran in London, and a gentleman who's unfortunately deceased, who's the founder of this company, presented this idea of connecting people who need money to buy something with people who have money, and their platform manages the risks through software. It's an eBay for money, is how they described it. And it's connecting people who need money with people who have money through a software called Zopa, a peer-to-peer lender. At the end of that presentation in 2005, everyone walked out of the room going, what was he talking about? We don't understand this. It was something that was far ahead of its time, and yet last year, a year ago, Zopa enabled the 2 billionth pound, and the British pound is worth about $1.50 or $1.40, depending on which day of the week. So let's say $3 billionth in February 2017, 12 years after launch, through their platform. It's about 4% of the UK personal credit marketplace, but it's doubling year on year as a platform, because it's offering cheaper loans to those who need money and higher interest to those who have money through their platform, because there's no humans in the middle involved. There's just software. And that's the biggest difference of fintech, that it's connecting people through platforms and software and algorithms, so there's no human overhead. There's no credit manager or risk manager, there's just a program. And that's the biggest difference today. Because when you do it that way, a bank needs 400, 500 basis points differential between loans and investments. These guys need 200. So it's half, or 100, it's a quarter. That's the difference. And that's what the fintech revolution is all about, which is saying we're moving the world away from physical distribution of paper money to digital distribution of data as a currency. Today I reckon that they'll be generating about $50 million per employee in market cap value. It's an incredibly innovative company, but it's all based around a really simple idea, doing one thing brilliantly well: merchant checkout online, plug-and-play software that's gone global through APIs. And for the first time in my life, the back office is finally changing. The back office we were talking about a lot the last decade as cloud and data, big data. But this decade, it's all about artificial intelligence, machine learning, and the blockchain. So these are the two technologies that are transforming the back office. And 43% of US banks run on COBOL systems from the 1980s. So for the first time, these banks have to transform their back office systems to be ready for real-time 21st century internet networking. A great example is a year ago, JP Morgan announced their artificial intelligence machine can analyze their wholesale commercial contracts with their corporate clients in 1 second that previously took 360,000 hours of legal time. So we can sack all the lawyers. What good news that is, I wonder. But it's true, software is easing the world. In UBS's case, they, in their wealth management division, have clients who email with changes of their portfolio and risk. And historically, it would take average 45 minutes per email for an administrator to deal with their wealth management clients' requests. Now with artificial intelligence, it's just automated. No human hand involved, it's just done. Email received, AI implements, done. The world, not just here in the US, in Silicon Valley, in Wall Street, in London, in Hong Kong, in Singapore, it's global. I travel the world non-stop, and every single country is starting to get a fintech startup ecosystem, a buzz. Because we can see, for the first time, everyone globally is connected through technology on the digital network, that we can transform the world. We can change the world. And this world is changing in a wave of things that have matured, like mobile wallets and mobile payments, to things that are maturing or maybe not quite there yet, such as distributed ledger and blockchain. A raft of technology change, fundamental change, not just in retail banking, but in insurance, in regulations, in capital markets, in wealth management. Every part of the financial system is being eaten by software of one company starting up doing one thing brilliantly well, rather than trying to do 1,000 things averagely. This is Nicholas Agelbach, who's one of the founders of Klarna. And when I interviewed him and said, how did you come up with this idea of Klarna, which is one of the biggest European startups, unicorns, he said, oh, it was me and my friends when we were working at Burger King. They've gone from flipping burgers to flipping billionaires. I mean, amazing story. But this is what can be achieved with today's technologies. Taking this map of open banking with technology and focusing on doing one thing brilliantly well within that map, rather than trying to do everything.